This is Alan Bush with the Daily Financial Forecast for Tuesday, January 16th. In the stock index futures, we are seeing prices lower this morning as various central bank officials push back against expectations of aggressive interest rate cuts this year. We had the January Empire State Manufacturing Index coming in at a very surprisingly weak negative 43.7. when negative 4.7 was expected, and the new orders index at negative 49.4. That compares to a negative 11.3 in December. The fundamentals, though, and technicals still appear to be supportive to stock index futures longer term, despite recent talk of a potentially less dovish Fed this year. Also, I would not be surprised to see stock index futures trading higher on the day after these morning lower prices. And in the currency markets, the dollar index surprisingly gapped higher this morning with these overnight gains very hard to explain. Sharply higher prices for the US dollar suggest the fundamentals have changed. Therefore, after being bearish on the greenback for several months now, I can now only be just neutral on the dollar index. So something very much has changed very recently. In the euro currency, we are seeing prices lower despite hawkish comments from a variety of ECB officials. Also, in the interest rate futures markets, we are seeing futures lower as yields on the treasuries increase. In fact, we had the yield on a 10-year treasury note pushing back over 4%. Futures firming only slightly with the very weak January Empire State Manufacturing Index. Still only a 5% chance that the Fed will be cutting rates at the January 31st meeting. A 95% chance of no change, but still looks like the Fed is on track for a rate cut at the March 20th meeting. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.